Ken Orange Theory Trader back with you with another video, just talking about risk to reward. So let's not waste time and get right into it. Now, risk to reward is more important than win rate. However, I do want to include win rate to help understand what's needed in order to maintain profitability. And a lot of people ask, okay, what type of risk to reward should I go for? Obviously, you see here, the lower the risk to reward, the more or higher your win rate has to be. If you go for a 1-to-1, let's say you risk 100 to make 100. You need to win at least 6 out of the 10 trades that you take in order to be making money. Your break-even point will be 50 versus the inverse. If you're doing a consistent 1-to-5, you only have to win 2 out of your 10 trades to be making money. However, there are downsides to each of these. So I'm going to go over those right now. So here we go. First off, with the 1-to-1. Can you make a 1-to-1 work? Yes. But you do need the highest win rate in order to make it happen. Because the thing is, with 1-to-1, you get easy setups. Almost any, you can take random trades with a 1-to-1 and could win a fair amount of them. Let's say you just set a random trade with a 50 pips take profit and a 50 pip stop loss. You could win. It's basically it's like almost like flipping a coin, almost. But it does require that win rate because if you hit a losing streak on the 1-to-1, it can be very daunting. So the 1-to-1 is actually best for people who like to scalp the market, if you have an EA or a bot, and if you like those tiny moves, some Forex pairs, 1-to-1 is typically best. You can even base it on the average daily range of a pair. Even like 100 pip stop loss, 100 pip stop loss, 100 pip take profit, 100 pip stop loss on a pair, and let's say the average daily move on that pair is, say, 75, it's going to go one way or the other eventually. But at the same time, do you want to trade like that, or do you want to be a little more strategic? Now, if you want to go for a 1-to-2, it's more balanced. You only need a 40% win rate, and you see this more so in swing trading, and plenty of setups can give a 1-to-2. Now, the thing is that the stops can get hit often if you have a choppy market. Sometimes your reward doesn't feel as big as you could get on other risk reward models, but it's good for day traders, Forex major pairs, liquid stocks, just about any retail strategy. A lot of people just shoot for 1-to-2 and call it. Now, the 1-to-3 risk to reward ratio, it's called the sweet spot, because with this one, you get to do some very good compounding and building on the account. More so people who follow trends use this practice. And as well, you don't need as many setups. So here's the deal. If you're trying to get a 1-to-2 or a 1-to-5, the odds of you hitting a 1-to-2 are higher than you hitting a 1-to-5 because price doesn't have to go as far. That's the main thing I want you to get out of all of this. Okay. Now, 1-to-3 is ideal for swing traders, trend followers, crypto and Forex traders with a clear structure. Now, 1-to-4, you only have to win a quarter of your trades. This can lead to some astronomical growth. Very good for position traders using breakout systems. I teach that here on the channel, Candle Range Theory, with a small candle range breakout. You will see that. You can have big stops with this, though, and the losers, they can hurt. And as well with a 1-to-5, 20% win rate is all you need. With a 1-to-5, the good thing about it is that when you win, it could erase tons of losses, okay? But you're not going to get as many setups. That's the thing, because you have to remember, you want price to go 5 times whatever your risk is. That can be a lot. If you have a 20 pip stop loss, I'm using Forex, okay? If you have a 20 pip stop loss, that means you want price to go 100 pips. That's not going to happen every day. Versus if you have a 1-to-2 and you have let's say a 10 pip stop loss and you only want price to go 20 or 25 pips, the odds of that happening are greater than it going 5 times your risk. So just remember, the higher your risk to reward, okay, the higher your risk and reward, the probability does drop because you're wanting price to go in a direction or in a manner that sometimes it may not go. All right. So it's just, you have to remember that if you want to see a 1-to-5, you'll be lucky to get 1-to-2 of those a week. Just being honest, because the stop loss is so small and the range is so big that may hit it once per pair per week. And that's all you'll get. So you have to be good with that. So some better questions are going to be, what's your trading style? Are you a swing trader? If you're a swing trader, you probably don't need to be doing 1-to-1s. Okay, but if you're a scalper, you probably want to go 1-to-2, 1-to-3. Also, as well, how big is your account and how much money do you want to make? These are only questions that you can answer for yourself. But take a look at these setups. Take a look at these risk to reward models. Look at the pain. Look at the pros. Look at the cons, and decide which one fits your style best. Because you can make money with any one of them. Everything works, nothing doesn't. But my main thing, I've even seen people talk about a negative risk to reward ratio and making money on that. Okay, now I don't do that. I'm not even halfway interested in that. But there are people who get results on it. So that's also something else that you can look into. So just remember, you got options, but you just have to decide which one is going to fit you the best. Okay, 1 to 2, 1 to 1, 1 to 3, etc., etc. All right, so I definitely appreciate you watching. Thanks for tuning in for more trading and tips. Take a look at the other videos on the channel or in the description, and be sure to have a great rest of your day.